Hey everyone, Rob B here with Rob D, and you are listening to the Property Podcast. Now, this is going to be a popular episode because we are giving you the best yielding places in the UK that you can invest in right now. And if that isn't enough, we're going to look at that list and tell you our favourite hotspots that we would invest in ourselves.
Welcome to the Property Podcast. Thank you for joining us. This is the part of our week where we take time out from what we're actually supposed to be doing, which is advising a multi-million pound property fund and putting together a whole load of property deals. You can find out more about that at portfolio.co.uk. And we share the knowledge that we've gained from doing that for free. We love doing it, and if you love hearing it, then make sure you're following the show. On Apple Podcasts, you can hit the little plus. On Spotify, you can hit the follow button. Make sure you do that so episodes like this one find their way directly to you. So in this episode, we're revealing the areas themselves. We're sharing some super valuable lessons that you can take and apply to any investment that you make. And do make sure you stick around, because at the end, we are going to be telling you where we personally would invest from this list.
So it's time for our news story of the week, and great news for the UK. It seems that the majority of the world's greatest cities are actually in the UK. So with all the chaos at airports now, why bother? Because we've got all the best places, well, at least all the best cities here in the UK, according to this Time Out survey, Rob.
Yes, indeed. 53 cities across the world ranked by Time Out on various things to do with nightlife, communities, and are supposed to be about the livability of a city, I think, rather than its tourist potential. But yeah, great news for the UK. Scotland in particular. Edinburgh topping the list, ahead of Chicago and Medellin in second and third. Glasgow in fourth. So two of the top four places go to Scotland alone. You have to get down to number 13 before England makes an appearance, and surely it's London, right? No, it's Manchester. Manchester at 13, Rob, ahead of London, which is 17th. Not sure about that.
Yes, all those UK cities beat New York in 20th. Wow, New York in 20th. Birmingham at 22. Will be a bit cross that they've not beat New York at 20. So yes, all those UK cities outperforming the likes of Porto, New York, Buenos Aires, Tokyo, San Francisco, because they're way down in the 20s, Delhi, Toronto, Lisbon, Mexico City, and Paris is way down in 32. I mean, Rob, I think it's great news that the UK cities have done well here, but I've got a feeling that there was a lot of Brits surveyed for them to appear so high, because unlike it seems half the people in this survey, I have travelled and I've been to a few of these cities, and while those UK cities are all very good, I am going to be controversial and report that I feel this survey may not be that credible, and because some of these other cities way down are a little better than some of the UK cities mentioned.
But Rob, have you lived in these cities? Because this is a thing about livability. So maybe you're missing something that the locals are seeing. But I agree. But I think it is nice to be reminded as property investors, as a UK-focused podcast, I focus on investing in an in-demand asset on a small island that is globally punching above its weight in lots of ways. So I'll take that as a positive, even though I would disagree with many of the rankings on this list. Just before we get into our main topic this week, a little reminder that our app Portfolio has just hit a major milestone. The minimum investment has fallen to just £1,000, which is something that we're so excited about, because this has been the mission of Portfolio all along, what we've laboured so hard on, to open up the benefits of property investing to as many people as possible. And now reducing the minimum to just £1,000 feels like a major milestone on that journey, Rob.
It is. It's a massive milestone, because it's been our mission to make property investment as accessible to as many people as possible. And this is a huge step on that journey, because it's massive being able to get involved now with just £1,000. That's huge. It's absolutely huge. When we started Portfolio, the minimum was £50,000. So in less than 12 months, we've made huge progress. And that opens up Portfolio to so many more people. So if you want more information, head over to portfolio.co.uk, or you can just go straight to your app stores, whether it's Android or Apple, and search for Portfolio and download the app there. Because as we mentioned previously, although you may have missed, there is no more waiting list. So with no more waiting list, you can download the app right now.
Where should you invest if you're investing for yield? That is the question that we're answering in this episode. Normally, when we talk about areas to invest, we talk a lot about capital growth. That's partially because it's more exciting, but it's also because that is historically where the benefit of the gains has been. So I believe that a focus on capital growth is the right thing to do. But that's not the only consideration. All investors are interested in yield, and for some investors, yield is by far their main consideration. So in this episode, we're going to run through some data that we've dug out. We're going to reveal the 5 best areas of the country to invest in if you're investing for yield. After we've run through that top 5, we've got a bit more data that we found that throws some other locations into the mix. And then we're going to get to the most important part of all. Of those areas, which ones should you actually invest in? So Rob, let's get into it, shall we?
Alrighty, so let's give you the top 5. We won't make you wait any longer. We know you want this information. So, in at number 5, and a bit of a surprise, in fact, a bit of a shock, is York, YO10, just outside the centre. I'm so surprised that York is on this list. I will be opening up Rightmove to look at this area after this episode because York is an absolute powerhouse of an area, and the fact that it's made a top 5 list is remarkable. I'd expect York to be in the bottom 5 of a yield list, so that's a really interesting one.
It is. Number 4, less surprising, Newcastle upon Tyne. Newcastle generally is a high-yielding area. The postcode that's made the list is NE6. I don't know where that is. I just looked it up. That's next to the city centre. So it seems to be in a reasonably decent location. It would need some more research, but I'm not surprised to see Newcastle on this list. Because if you'd asked me to name some areas before we saw the data, that's one that I would have named. The next one, though, is a lot more of a surprise.
Yeah, Manchester comes third. M14 specifically, which is just south of the city centre. Now, if you said to me an area of Manchester was going to make our top yielding list, I would expect it to be on the outskirts of Greater Manchester. This is very close to the city centre, M14, so a surprise that Manchester's featured so highly on this list.
Number 2 is Bradford, BD1, and this is the first city centre postcode that we've seen on here. BD1 covers Bradford city centre, which makes it particularly interesting. And also, noticeably, the average asking price in BD1 is lower, dramatically lower than all the other locations that are on this list. So what should we make of that? Is there an opportunity there? We'll find out when we get to the discussion. But we've still got number 1 to go, and this, Rob, is a shock.
Yeah, number 1 is a shock. You'd expect this to be on our top lists, but not for yield, just as a great place to invest. So therefore, you wouldn't expect the yield to be great, but number 1 is Nottingham. Yes, Nottingham. You've actually got 2 postcodes featuring here. You've got NG7, which is outside the city centre, but remarkably, NG1, the city centre itself, is in that list as well. So topping the list is Nottingham, outside the city centre and the city centre itself. Wowzers, I was not expecting that.
I think Nottingham's Investment and Development Committee owes us something here. It appeared on our list of hotspots for the year. We've talked about it extensively. And now here it is again, topping a yield list. It's amazing. I think it's worth saying that we haven't mentioned the actual yields given in this data because they are wrong. You can just tell from having a tiny bit of experience of these areas that they're not correct because they're based off a small number of sales. And in those Nottingham postcodes, for example, I strongly suspect that they're being skewed by student lettings, which is pulling the yield up. That doesn't mean the list isn't valid. It just means that the numbers themselves probably aren't super accurate. But for that reason, Rob, I think it's worth combining with another source of data.
Yes, let's do it. So this data source is from the last couple of years, so not quite as recent, but it looks at a wider area. So therefore, there's more data samples to select from. And I'm going to run through the entire list, and the range of yields here is actually very close. So of every place I'm mentioning right now, I'll go from 10 to 1, but from 10 to 1, there's 0.4 difference in the yield. At number 10, we've got Hartlepool, 9 Nottingham, 8 County Durham, 7 Sunderland, 6 Stirling, 5 Glasgow, 4 Inverclyde. Number 3 and 2, you've got North Ayrshire and then East Ayrshire. And then at number 1, you've got Middlesbrough. Now, Rob, as I said, there's not a lot in between any of those yields. But there are some places that are similar to what we've listed off from the charts that we've been through. But there are some differences here. So before we get into the overall lessons, why do you think that we've seen a bit of a change in the hotspots featured here? And besides, obviously, just wider data points for this set of data, and which one should we pay more close attention to?
It's an interesting question. And the big difference between these two sets of data is the first one is looking at postcode areas specifically, and the second one is looking at entire towns or cities. And each of those has pros and cons. So obviously more granular data is more useful, but also more granular data is less reliable because there are fewer transactions. So let's take Nottingham as an example. That occupies the two top spots of the postcode table. Then when you look at those postcodes, one of them is NG1, the city centre. I'm suspicious about that being in there. City centre yields in Nottingham are good compared to other city centres, but there's no way they're that good. So I think they're being skewed by student lets in there on the rental side. Then you look at NG7. Nottingham postcode areas are large, and so it's hard to draw too much from them. But NG7 does contain some areas where you probably wouldn't want to invest. They're just not the best. So if you're looking purely at that, you can find reasons to say, well, I'm a little bit suspicious about those two entries. But then you see Nottingham appearing on the city list, and that would give me a lot more comfort, because it's like, well, clearly Nottingham as a city, it's not just these particular spots that are in there for some reason. Clearly the whole city is good. And when you look at factors like its proximity to London and its employment and its universities and things like that, when compared to some of the other areas in that list, it makes it look like a pretty strong prospect. So I think actually looking at both of these together is a pretty useful exercise. So we've done that, Rob. We promised some lessons. What jumps out at you from this?
Yeah, we'll give you some lessons. And I think, obviously, you're all keen to hear as well, which of these areas would we invest in? So we'll give you those areas as well. But the instant lessons that everyone should take from these charts is be careful when looking at these type of charts, because having a bit of information is possibly a dangerous thing if you don't know what you're doing. You need to do a lot of research. So I've jokingly said that, I'm going to open Rightmove up straight after this and have a look at YO10 in York. Well, maybe not quite joking. I will probably actually have a look, but I'm not suddenly going to be putting an offer in the next 24 hours. It's an interesting way to start to shortlist areas if you are focused on yield. And actually, probably the second lesson I'd take from this is we see time and time again in property, people get excited by hotspot areas, rushing in and just buying anything. Or maybe it's yield hotspot areas like this and people rushing into those areas and start, putting offers in blind or, doing limited research and starting to try and get themselves an investment. That is not a good strategy. You should use information like this as an absolute starting point, not an end point. And you can start to then go, okay, which of all these areas, if yield is important to me, should I consider looking at further? And there are different things you can do to decide what type of area you want to invest in. But for me, Rob, a big driver and probably lesson 2 here is not just assessing the yield, but also assessing the average rent. Because in these charts, there are some very different numbers.
Yes, I think that's a really important observation. So if you look at the median rent for a 2-bed in each of these locations, there's a really big range. So Middlesbrough, which is top of the list for yield, has a median 2-bed rent of £450 a month. That personally puts me off because it means, well, you need a lot more properties to add up to the same amount of rent if rent is what you were fixated on. But also things like your cost of a gas safety certificate, the cost of repainting a 2-bed when tenants have left it in not such a great state is pretty much the same, whatever the rent is. So you can find that percentage-wise, the amount that maintenance and repairs are eating into your rent is far greater when the rent is £450 than it is on some of the higher rental areas. And some are not quite double, but not far off. So in Nottingham, it's £792. So the yield is almost the same. It's only slightly lower, but the rent is a lot higher. So you could own pretty much half the number of properties and it will get you to the same place. So it's not just about the percentage, the actual amount of rent does matter as an investor as well.
The third lesson to take from this is you can spot ripple effect opportunities or potential ripple effect opportunities by looking at this information. So in the original list of 5 that we gave you of top postcodes, there are actually 4 postcodes there that are just outside city centres. So you've got NE6 in Newcastle, you've got M14 Manchester, you've got NG7 Nottingham, and you've got YO10 for Yorkshire or York. Now, that's interesting to me because the city centres of those areas are quite strong investment areas. And we often talk about the ripple effect into neighbouring towns and cities, but also the ripple effect within a city itself. And you can see capital growth reach out to these areas which are just outside the cities because people move out as property prices and rents are high in those particular areas. Now, where would you look next? Well, something that would catch my attention is areas that are particularly high yield, because if you've got the fundamentals of the city centre on your doorstep and a high yield, you have the potential, not the guarantee, the potential for capital growth opportunities. So just because those postcodes are close doesn't mean they're going to do well. But also, just because some of those postcodes might not be in perceived desirable areas doesn't mean they won't do well. Also, you only have to look at areas on the outskirts of some of the major cities, Manchester and London as prime examples, that areas on the edge in the past that had been not so great, which have been dramatically changed because of their close proximity to the city centres and are completely different places now. So there is that potential there for it to change that way. Again, this is not advice to start piling into all these areas because they're close to places that we would invest right now, but it would be a good starting place, again, a starting place to look at areas that have that ripple effect potential that could go on to achieve some decent capital growth. Now, of those 4 postcodes I've listed, are they all going to be good? No, but maybe 1 or 2 could have great potential. So if this list interests you, do that research. But also the lessons aren't exclusive to these areas. You can apply this to any area that you like. If it's got particularly expensive, an area that you want to invest in, and you feel like, actually, I don't want to invest it there, or I can't invest there, look at the ripple effect areas around it, and then assess the yields of those areas, and maybe you can identify your own hotspot that you can apply that same framework.
Yeah, and you've started to pull capital growth back into it, which I think is important. Some investors, like we say, will invest purely for yield, and that's the only thing they care about. But most investors, I'd say, probably want a balance. And really, even if you're only interested in the yield, if you have the chance of some capital growth, you'd probably take it. So then you can get into an exercise of, well, which of these are only ever going to have yield and which may get some growth as well. And what we're really talking about there is potential and desirability, because in order to get capital growth, you basically need to get an area becoming more desirable, more popular, people willing to pay more to live there. And there are some areas where you can clearly see that happening. So we've talked about Nottingham being one of our hotspots. That's obvious. Stirling on that list jumps out as well because of its proximity to Glasgow and actually being a very nice place in its own right. There are other places on that list. I'm not going to name them because I've offended enough of the country in the past, but where you can just kind of tell that they're unlikely to get a lot of growth, or if they do, they'll get it at the very end of the cycle for a brief period of time because there's nowhere else left to get growth. And that's really just about going back to fundamentals, looking at connectivity, looking at employment. It's not a difficult thing to do because I think that is important to factor in for most investors. If you could get a 7% yield in 2 different places, but one of them had the prospect for growth and one didn't, it's pretty obvious which one you're going to go for. So those are the lessons that you can draw out of looking at some of this information. Lessons are great, Rob, but being told what to do is even better. So out of everywhere we've spoken about, where would you invest?
For long-time listeners, I don't think anyone's going to be falling off their chair or, collapsing on their commute with what I'm about to say. But for me, it's the obvious ones. You don't have to try and be too smart here. Stick to the safe stuff. Like we talked about with the low rents, they would be areas that I personally would avoid because your capital growth potential is probably not going to be as high as some of the areas with higher rents. And the reason those areas have higher rents are for multiple reasons, but things like better fundamentals, desire for people to live there, so it pushes the market up to those price points. But Nottingham fundamentals are absolutely fantastic, so I'd be looking there. Manchester, the fundamentals are absolutely fantastic. If I could get a good yielding property on the edge of the city centre, and that postcode is pretty big, if I could get one near the city centre end that I felt was interesting, then I'd look at that more closely. And of course, York. I mean, York for me with low yields is a really interesting, and I think if you get it right, brilliant investment opportunity. So York with a bit of yield, yeah, they would be the areas that stand out. In the other list, Rob, of the 10 that we rattled through, I'd probably consider Glasgow, and of course I've already mentioned Nottingham. So I'm playing it safe. I'm looking for the areas with the higher rents from this list, and I'm looking for the areas that are stronger from fundamentals point of view, shops, schools, transport links, major employment, major investment, all that good stuff. They're the things that I'd be looking for, and those areas that I've rattled off are the strongest when you measure against those things. So they would be the areas I'd invest in. Now I'm interested. Would you not invest in any of those areas? And are there any areas that I've not mentioned that you'd potentially look at? Actually, I'm going to throw one more in. I'd probably consider sterling as well, although I don't know it as well, but the rents are quite high. So that's my list. But would you add or subtract from that list? I'm interested. I'm curious. Go.
Well, our lists are going to be similar because our objectives are similar. I'm going to try and find some points of difference. I'd throw in Newcastle. Based on literally less than 30 seconds of looking at the area, I don't think the particular postcode we talked about is where I would go necessarily, but I think Newcastle in general yields well and has potential. What I think possibly is holding Newcastle back is the level of wages and wage growth, so that's something I want to get comfortable around. Is there anywhere I take out? No, definitely not. Of everywhere on that list, sterling, which I think you mentioned at the end, I don't know a huge amount about it, but I think that's probably the most interesting, non-obvious one. But then I think it's also worth pointing out that nobody has perfect knowledge of everywhere, and some of this could just be lack of knowledge. So, for example, Inverclyde, I'd never heard of. I've just looked it up. It seems to include Greenock, which I've only heard of because of Final Score. I have no knowledge of this area at all. It might be great, it might not be. Ayrshire, I would have no opinion of, except for the fact that I know somebody who does property investment in Ayrshire and does very well. So that may be a really interesting area. It's just one that I don't know anything about. So I think what you said earlier is spot on, which is that you can use lists like this for a starting point for your own research. But just because we've said that we like somewhere and we don't like somewhere else, or we haven't mentioned somewhere else, doesn't mean that you should be completely led by that, because we certainly don't know it all.
No, we don't. But everyone likes an indication of where to start looking at least. And I use the word start. To recap, our list is Nottingham, Manchester, York, Glasgow, maybe Stirling, and maybe Newcastle. So that is the list. And you know what? You may now start to go and look at those areas and start your research for yourself. Or you may just take some of the lessons that we've gone through today and apply it to areas that you're interested in. I think it's useful to look at these charts. And like we've said already, use them to be useful, use them to be interesting, but don't use them as the be-all and end-all and make investment decisions just off a chart. You don't know where the data's come from, and in most cases, you won't know all the areas. So do be careful. But do use it. It's just one tool amongst many. And that's how you come to a conclusion on any investment, is using lots of data points and lots of information, and then coming to a final decision. But understanding what the yield is in an area is important and can give you an indication of what may happen in the future. So hopefully you found this useful. And if you have any more questions on this, then drop us a line on Ask Rob and Rob. Go to propertyhub.net/ask, and we'll be happy to follow up and answer any questions you've got on this episode.
Okay, time now for Hub Extra, that bit of the show where we leave you with something a little bit more, whether it's a tool, a book that we've enjoyed, an idea, whatever it is. We like to end the show with a bit more value, and we back it up with a Hub Extra email every Friday if you're a Property Hub member. If you don't get the Hub Extra email already, then go to propertyhub.net, hit sign up in the top right-hand corner, and you can get it that way. This week, one for people in the Apple ecosystem. Sorry, Android users, but it's called Spark. And it is a replacement for the default email app that you might use on your iPhone or on your Mac. It works across both. Now, you may well think there's absolutely nothing wrong with the email program on my iPhone or my Mac, and you're probably right. And if you're like most people, you wouldn't care about this kind of thing because it's a bit geeky. But I do care about these things, and so I switched to using Spark. It's completely free, and I love it because it helps me get through my email a lot faster. It's kind of hard to describe what's better about it. Is just like little subtle things like some of the swipe gestures and shortcuts and things like that. But I feel like I'm going through and processing my email and archiving and replying and all that kind of thing way faster. So if you are the kind of person who likes to really optimize your tech setup, then maybe it's worth a look. You'll find it at sparkmailapp.com.
Well, that is us done for another week. We'll be back on Tuesday with Ask Rob and Rob, and the main podcast will be back on Thursday. So until then, take care, have fun. Bye-bye.
Bye-bye.